Good afternoon, ladies and gentlemen. Welcome today. Delighted to be speaking in front of this group. I think it's my fourth year speaking in front of this group about the challenges of raising capital in Canada, and we're still talking about it, and this is 4 years later. And it's now called the Velocity, so hopefully we get more progress in the area. But my name is Jason Saltzman. I'm a partner at Gowling WLG Canada. I practice corporate finance and securities law. My practice is helping companies raise money, go public, everyone from the early stage entrepreneur all the way through the life cycle, VC rounds and whatnot, and I work a lot in the alternative investment and crypto space, working a lot with the platform operators and those that are helping companies raise money. And we have a fantastic panel here today that's comprised of entrepreneurs as well as platform operators, and I'm delighted to introduce them to you right now. So on my far left, we have Peter Paul van Hoeken, who's founder and CEO of FrontFundr, which is a fintech company focused on connecting private companies with the wider investment community through innovative online funding and investment solutions. He has over 15 years of experience in finance, investment management, and business consultancy, and he's worked in Vancouver as Director of Business Development with finance and investment company in the renewable energy space and as Finance Director of a real estate investment fund. Prior to that, Peter Paul's held a number of positions with several global banks in the areas of corporate strategy, corporate investment banking. He is also Director of the National Board of the Private Capital Markets Association. On my immediate right, and sorry to jump all around here, Ali Pourdad. Ali has been the CEO of Progressa since its inception in 2013. Under his leadership, the company has raised over $50 million of investor capital and invested over $2 million in his proprietary, powered by Progressa, decision engine for Canadian enterprise partners looking to enhance collection strategies in a positive way. The company has grown to over 110 employees in Vancouver and Toronto. Ali has decisively positioned Progressa for its next generation of growth by recently executing on several initiatives, including creating one of Canada's most popular Fintech exempt market bond offerings and securing an $11.4 million Series A financing round. Ali is also a regular contributor to Business in Vancouver's weekly radio technology panel and was named to Business in Vancouver's Top 40 Under 40 in 2017. On my far right, we have Manuge. Derek has over 5 years in financial risk management, compliance, and investments. He was previously a financial risk manager at KPMG and Scotiabank. Derek consulted for over 40 financial institutions, governments, and regulatory agencies. He is currently an advisor at the Blockchain Hub and member of the Blockchain Risk Research Group at GARP. He holds an FRM designation and a master's degree in mathematics from the University of Guelph. And last but not least, on my immediate left, Amar Nijjar. Amar is the founder of R2 Capital and Investments, Canada's first national online marketplace for direct debt and equity investing into commercial properties. Under his leadership, R2 has grown to 25 employees and in 2017 transacted on $207 million worth of debt and equity capital. R2 has funded projects in Victoria, Vancouver, Phoenix, and locally here in Toronto. Amar has funded over $10 billion and underwritten over $30 billion of real estate during his career. Prior to starting R2, Amar was practice leader and executive vice president at Jones Lang LaSalle Debt Capital Markets Group. R2 continues to add talents to its fast-growing operations and is looking for leaders of tomorrow. Amar holds an MBA from Schulich School of Business at York and an undergraduate degree in chemical engineering. That's our panel today. Before jumping into the questions, I just want to set the stage very briefly and provide a very high-level overview of the legal landscape when it comes to raising capital in this country. So as we all know, we don't have a national securities regulator in Canada. When you go to sell what's something called a security, which is more obvious in the case of common shares and promissory notes and whatnot to fund the capital needs of a company, and less obvious when it comes to new asset classes such as cryptocurrencies, you need to comply with securities law in the province where you're selling securities. And that means that you have to file a prospectus with the securities commissions and get comments from the commissions before you get a receipt to sell securities for your prospectus. Alternatively, you can rely on an exemption from the prospectus requirements, We have a number of exemptions in Canada, such as sales made to accredited investors, which is a sophisticated group of high financial net worth investors, which could be corporate or individuals. There are other exemptions, such as the offering memorandum exemption, where if you provide an investor with a document that's like a prospectus that contains detailed disclosure of the business and the securities that are being offered and provides certain rights of action to investors in the event that there's a misrepresentation, then you can sell securities under that exemption, and it varies province by province as to limits that investors can invest in. And then they're quite technical rules, and we'll get into them a little bit more later. There's also a newer exemption called the crowdfunding exemption, which we're not going to talk much about because that will also come up in the course of our discussion today. So I just wanted to immediately throw out to the panel, and I thought I'd start with Peter, Paul, and Amar. What are the different methods that your clients use to raise capital? And I'd also appreciate your thoughts on the challenges and the opportunities related by the use of those exemptions.
Yeah, so on FrontFundr, excuse me, as an online funding investment platform, we use all the exemptions, prospective exemptions, Jason, that you mentioned. On our platform, the idea is to reach out to as many investors as possible, typically. So the offering memorandum, which indeed enables you to raise capital from both accredited and non-accredited investor, is the ideal instrument in Canada to use, also because it's the one that's pretty much harmonized across the country. So our issuers, companies that are looking to raise capital and come to us are typically interested in the offering memorandum or indeed the crowdfunding rules that have been introduced in the last couple of years in Canada. But there are some challenges with those because they haven't been really harmonized. So currently we have about 3-4 different crowdfunding rules in the different provinces, and they don't mix very well. So that's challenging. We also have issuers that say, look, I have a list of investors, perhaps accredited investors only, that I'd like to raise capital from, and then we help them with onboarding those accredited investors. The whole idea really is on FrontFundr is to use technology, obviously, to facilitate the entire process, connect private companies with the wider investor community, essentially the public, and to transact everything online, so from initial pledge to deal completion.
Yeah, similar to some of the things that you said, our business is an online marketplace to connect investors with high-quality commercial real estate, large projects. So a $50, $100 million condo project, shopping center, medical office building, etc. Cash flowing, good business plan, good sponsors. As you can appreciate in commercial real estate, the equity capital beyond the debt or mezzanine, which you can get from institutional sources that we also help our clients with, the equity capital typically on large projects tend to be $2, $5, or $10 million, $2 to $10 million per raise. So I'm answering the question kind of upside down. When you have to raise $2 to $10 million on a project, you really cannot rely on crowdfunding exemption because of the restrictions, which are $2,500 maximum per investor, as well as $1.5 million of raise, depending on which province you are in. There's some iterations of that. So we don't really use crowdfunding exemption. It also has marketing restrictions on it. We really rely on accreds, which is high net worth folks in a way with their income and asset tests. But more and more we're trying to rely on offering memorandum exemption, where we either work with the issuers to push them to do an offering memorandum so that we can raise $5 or $10 million per raise. And we'll, I guess, talk a little bit more about that, so I won't go into too much length right now. So our business is really accredited investors at this point and offering memorandum. And going forward, we are working with the OSC right now. We have an application on a structure which will give us a little bit more flexibility to achieve our goal of opening up higher quality deals with slightly bigger raises in smaller amounts to multiple retail investors. And from a regulatory standpoint, you just have to engage the regulators early enough, and that's what we're doing. But there's a process, so can't talk too much about it right now, but hopefully in the next session we will.
Okay, great. I just want to ask Ali what his experience has been in raising money just as an entrepreneur for the business, and what your thoughts about the process of capital raise in Canada.
Sure, yeah, thank you. So Progressa, for those of you who don't know, is a consumer finance business. So consumer finance, we're lending money to consumers, and every dollar that I lend out to a consumer is a dollar I have to raise, technically. So I've had to do a lot of fundraising in the last 4.5 years. To date, it's been well over $50 million, debt and equity. But primarily we've used these sort of exemptions on the debt side. So traditional lending, you borrow at X, you lend at Y, and you make the spread. So on the X side, we've filed an offering memorandum ourselves several years ago. It's probably on its 4th generation now. It's been quite successful, but certainly a lot of rigor went into it in the early days, working with the Securities Commission. That's what we primarily relied on to raise our subordinate debt. And on the sort of senior debt side, we've mainly actually syndicated our loans with more semi-institutional capital.
Yeah, and Derek, just on the blockchain and crypto side, what are your thoughts about the landscape?
Yeah, I guess Corl's in somewhat of a unique position, given that we, on the product side, offer royalty financing to startups, and similar to the way that FrontFundr would and the rest of the launch platforms here. We tap into technology infrastructure layers, for example, like APIs, so we get banking data and credit data, and even mine social media with machine learning algorithms to sort of determine what the investments would be, and really automate that funding process. But on the blockchain side, which is sort of unique to what we're doing, is we're working on essentially tokenizing the equity in our company and working very closely with the regulators on this because of the immense potential that blockchains have in terms of shifting the way that capital is raised in this marketplace. And not only for smaller companies, which are traditionally in that seed space, that there isn't a lot of capital available to them. 98% of all businesses are small by definition, meaning less than $1 million in revenue or less than 20 employees in the company, yet they have the hardest time of getting access to capital. The risk capital there is just not available. And when you have regulation that is somewhat only open to accredited investors, whatever that definition may mean in different jurisdictions, you're limiting the total capital marketplace out there. And we do see ICOs, the wave of capital that have flown into the space. For example, in 2017, it was over $4 billion raised in ICOs. And then even in January, I think the numbers were about $1.7 billion already. And that will continue to grow. The challenges with regulation, and I welcome the regulators that enter the space and provide a governance framework to operate an ICO in a compliant manner. There are companies out there that, in the last talk, Polymath was mentioned, that will essentially provide the technology infrastructure layer to mathematically prove that you're complying with securities laws in each jurisdiction in which you're offering your security to do. And I find that type of mechanism is something that we'll see more commonplace. I do think securities tokens are going to be the future of the ICO market, if you will. And it's just going to take some hand-holding and some deeper conversations with regulators to ensure everyone is on board with this, because you want to be on side, you don't want to be offside, and it's just a matter of demonstrating that you can prove that you're on side by embedding all the conditions that are necessary within a smart contract.
Yeah, and that's great, and we'll have a panel right after this one with the regulators, and we're all pretty excited to hear their perspective directly, and my partner Usman will be moderating that session, so looking forward to that. I just want to turn it back over to Peter Paul and ask ways in which FrontFundr has been creative in its capital raising, and both for itself and for its clients.
Yeah, so we launched our platform mid-2015, but that was after we've been sort of cooking this whole thing for nearly 2 years, because what we had to figure out is, how do you bring investing in private companies online? How do you engage essentially public and enable the public to invest in these companies? And at the same time, you're doing that by staying offsite and meeting the securities regulation. So that was quite challenging to figure out, all the requirements regarding know your client, determining, suitability, whether an investment is suitable for an investor. As well as anti-money laundering laws. How do you bring all of that online using rules that are written assuming that there is nothing online, everything is paper and telephone and meeting people in person. So what appeared is to do that properly is to go down the route of getting fully registered as a dealer firm. So FrontFundr is an exempt market dealer, but purely online. So all our business happens online. We don't need to see the investor, but at the same time we make sure we comply with the KYC, suitability, AML, etc. So we got registered as the EMD. We're now operating across the country, and that enables us to have access to all available prospectus exemptions, as I mentioned. So the experience with us, and we've now closed 22 deals. We started small, and now we're doing deals of $500,000, $2 million, couple of million. And typically more and more companies are using the offering memorandum because it has either much higher limits or no limits, and it is pretty much harmonized across Canada. So that's what we see. About 50% of the companies on our platform is using the offering memorandum, and if they're looking to raise anywhere north of $500,000, we're typically entertaining with them. So look, if you really want to open this up and you want to essentially raise capital from the public while you're being a private company, then the offering memorandum is your best bet. So we've proven the concept. We indeed, you're correct. We also raised ourselves through our own platform. We did it last year, and we actually last week launched ourselves again on our own platform. So we're essentially, well, truly believe in our own product, and we are also using the ORM to raise capital for ourselves. A couple of other comments is that it's really companies on our platform are obviously looking to raise capital, but they're also looking to create awareness around their company, engage essentially the public around what they're doing, and invite them to invest in their company and literally grow with them. So it's not only a funding exercise, but it's also very much a marketing exercise. If you think about, and we currently have actually it's Red Mountain. It's a ski resort that was raising capital on our platform, and they raised now over 1.5 million from about 1,000, 1,500 investors, both in the US and in Canada. They're raising with FrontFundr in Canada and with a US platform in the US. So what they're doing is really raising capital, but they're also getting a whole group of people that are more engaged and aware of what they're doing. And that's really the key and the essence of raising capital from the public.
Okay, and Amar, just on the real estate side, what are you involved in that's sort of creative to help clients raise capital for their businesses?
I think in general, sometimes it can be hard to be very creative within the framework of the securities regulations that we have, but to the extent we can be flexible and engage the regulators to try to do a structure that works from a practical standpoint. So on that note, as you know, your firm and us, we have been talking about a structure which we are engaging OSC right now with. Our challenge has been, to step back for a second, trying to raise $5 or $10 million of capital for a large property developer who's well-established, who has access to their friends and family capital, or their own balance sheet is strong. But those are the kind of deals that we want to bring to our investors, not too many of those smaller cap, smaller balance sheet, startup kind of real estate developers. So in order to go up the quality spectrum, the challenge is that these large developers do not want to deal with a lot of small investors. That is our business model, in fact, which is to go after the smaller investors for smaller amounts and really have that concept of crowdfunding or masses participating, the wisdom of the crowd from that standpoint. So given that challenge, the structure that we are working from a creativity standpoint is that we ourselves will pull the investors in through an SPV. We ourselves will be the issuers, and we'll be able to offer on a joint venture basis that capital to the developer, and we can now go after those bigger developers, higher quality names on projects where they have ability to get bank debt, do the pre-sales, the marketing, they've done it, but they do not, those developers do not want to deal with those investors direct because of admin issues, because they don't want to get into the compliance business, they don't want to be doing their tax slips at the end of the year, et cetera, et cetera. So perhaps that's an example of a creative structure whereby we pool the investor money within the regulatory framework, and then we do a joint venture with the developer of that capital. It's more of a hands-on, more of a involved approach into the operations. So in that regard, we are scaling up our business as well.
Okay, and Ali?
Yeah, I mean, similar sentiment to Amar. I don't think I would use the word creativity. If anything, when we launched our OM several years back, I think, you know, I'll sort of take partial credit in the creativity that occurred. It was partially us and partially the Securities Commission. I think both sides had to get creative if we were going to come up with a practical solution for us to be able to raise money in BC the way we wanted to. So I have to give the BCSC credit, or at least half the credit, for coming up with a creative solution for us to fundraise in BC the way we wanted to under the OM. Basically, I won't bore everybody with it, but we've got clearance to basically raise money in BC within a structure that they provided for us and that we've agreed to ourselves without using exempt market dealers. And that's a pretty big deal for us because we're not talking about large-scale fundraising. We're talking about practical fundraising in small amounts. So they were willing to work with us on that. The challenge that occurred is that was a couple of challenges. One would be that other securities commissions didn't recognize, I mean, it's not the same in every securities commission in every province. So where BC was sort of willing to step forward and work with us on a regulatory framework, Alberta and Ontario were not. And so we followed different rules in Alberta and Ontario, the traditional exempt market dealer rules. And I guess the other challenge, actually very similar to Amar, it's self-created, but you know, if you're a small business and you're sort of wanting to be entrepreneurial and raise money from investors, then you have to follow the checks and balances after T5 slips and so on and so forth. So you create a bit of an infrastructure for yourself as an organization that you have to keep up with. That's just the practical reality of it.
Yeah, and just one comment. I do think that the introduction of the crowdfunding rules to open up capital raises to non-accredited investors is paramount, given the funding gaps right now. In Canada alone, the funding gap is about $100 billion for early stage companies. Worldwide, if you include emerging markets, it's anywhere from $4.5 to $5 trillion. The only way that capital gap is going to get filled is if you open up this traditional early stage startup asset class to non-traditional or non-accredited investors. And so I think it was a smart move from the regulators. The key is essentially ensuring that you're not exposing yourself too much, and the investors themselves are still protected through that framework.
And we also have exempt market dealers up here, like the platform operators that are on the panel today. They are registered firms, and they mentioned that. So we're just going to talk very briefly about compliance and the compliance burden and how they feel about you know, balancing the carrying on business with the compliance aspects of the business.
So if you want to run a platform where I would say in general operating as an EMD, you really need to want it, and you need to need it. Because the burden of not only to get registered initially as an exempt market dealer, but on a continuous basis, there's lots of compliance involved. You know, FrontFundr, we as online EMD went through our initial registration, and because this is an entirely new model that took us about a year and a half to figure that out. We recently went through an audit review by the Ontario Securities Commission. Which kept us busy for quite a few months, and this Thursday we have the BC Securities Commission at our doorstep to go through our business. So there's an ongoing compliance component to operating a platform, and that's why when people come to me and say, "Well, I want to do this, or I want to start issuing ICOs or whatever," and I'm going to probably get registered as EMD, I always want to okay, are you sure about that? And also, what is your business model? Even if you're running a fund and basically what you're doing is managing people's money and your income is in your business model is management fees, you know, don't bother, I would say, go down the route of an EMD. You don't need it. So, but if you're raising capital like we do with FrontFundr, you're really in the business of doing that on a daily basis, and we make income on trade fees, commission fees, then it's a different story. So, you know, the ongoing compliance of operating a platform in Canada, and specifically as we have you know, over 10 regulators in Canada, is challenging.
If you have any more comments, anything to add on that?
Real quick, on the point of harmonization, which you alluded to, I think that's a problem that needs to be solved. It's like we have 10 different countries within one country, and which then ties into compliance because of different types of forms, different types of investor limits that you can go after, even within the offering memorandum exemption. And same thing goes on to the crowdfunding, integrated crowdfunding, startup crowdfunding exemptions. We need more uniformity. Otherwise, it just gets confusing for small businesses, startups who are trying to scale up because capital is scarce and complexity leads to higher costs of doing business. And if you're not extremely well funded, that becomes a huge challenge. And the second point is perhaps some of the issues we have, for example, on the portal, it's supposed to be online, an investor comes in an ideal world, an accredited investor has a checkbox which says, I have a certain income and a certain asset base, and based on that, I am an accredited investor, check. And based on what he answered, the system can cross-check with an algorithm whether he qualifies for those limits or not. It's not there. The obligation is huge on the compliance officers, compliance team within an EMD to make sure that you got to look at their net worth statements or asset statements, really make sure that they are an accredited investor, which in a way, if you think it's kind of ironic, if somebody is saying they are an accredited investor, I think they're signing off on that. You know, I think the assumption is that they are lying or they might be lying, so you got to double check, which is a little bit kind of funny way of looking at things. So those are my 2 points on compliance.
Okay, thanks, Amar. So I'm just going to ask Derek about opportunities that the blockchain and ICO space can create for the raising of capital in this country, and if it's going to displace traditional ways of raising capital over the long term.
So I think the crowdfunding rules have made an important shift towards opening this asset class and funding in general to non-accredited investors. I think that's sort of the 1.0. The 2.0 would be then to take all of these hotspots of investors that are located around the country and then union those together to provide global liquidity, and blockchains can provide that, and that sort of trustless, provincial-less or borderless, immutable, secure type of framework that you need in securities. And so I think it's a natural evolution for these centralized portals or funding mechanisms to move decentralized. So it's a matter of essentially porting this crowdfunding world that we know and love today towards something that's more decentralized, because the capital is flowing there. The matter is how do you contain that, and how do you provide a platform that everyone can access without having some sort of censorship that's being imposed on them.
Yeah, I mean, from my perspective, it's quite exciting. As an entrepreneur that's constantly raising capital in this country, you know, sort of even today, I've had several conversations with people approaching me on using an ICO to raise capital to fund our loans, and I mean, certainly appealing from many aspects. You know, you can go and raise money across borders. There's sort of a less regulatory burden. But when I hear things like that, it's at this point in time, it almost sounds too good to be true. And also, I've had my experience with the regulators, and I want to make sure that, you know, above anything else, that now that I have a company and it's grown and I'm, you know, 4 or 5 years in, I want to make sure that, you know, the regulators are understanding this first ahead of me, because it's just not worth the risk anymore. That's my perspective. Okay,
great. I just want to ask Amar about some of the challenges with some of the existing exemptions.
I think there's a little bit of stuff covered on offering memorandum, but just quickly talk about crowdfunding exemption. We haven't talked a lot more about that. There are a few different variations that we talked about harmonization across different provinces, but essentially there are a few problems with the way that exemption is set up right now that it's not very practical, because A, $2,500 the maximum investment per investor. B, $1.5 million the maximum raise. C, you need to have audited statements if you raise over $750,000. There is a lot of cost if you're trying to raise $1 million as a really small business with a great idea. If you do the math, the cost to raise that $1 million is about 35%, which is broken down with setting up your legals, LP, GP, subscription docs, or whatever, then you got to find an EMD with the portal. So they're going to charge you 10, 15% to raise that capital, because there's a lot of burden on them to do that as well. Audited financial statements for a small business trying to raise $1 million, that's like $25,000, $30,000 if you're a going concern. So you do the math, $1 million, $300,000 out of that, $350,000 out of that is just gone into cost of setting it up. So now you're left with $700,000 net or less in your pocket. And so your project's got to have a huge amount of returns, and which oftentimes correlate with risk as well. So I think those exemptions are really not serving the purpose that they should. And most importantly, the marketing restriction, which is huge. You cannot market to the crowd. You can't really use the wisdom of crowd by saying we want to raise capital against this project. And you can look at other jurisdictions such as UK, FCA has, I think, a more approach of fairness. You can advertise as long as your marketing is fair. I mean, we understand the regulatory viewpoint on it is that you don't want bad actors just throwing stuff out there, which muddies it for everybody else. I get that point, but I think it's not set up for small businesses to really raise capital, which was the intent to begin with. So we really hope that that will evolve in a quick fashion.
Okay, thanks. Yeah, no, before we open it up to questions, I just want to throw one more question, and that is I want to get the panel's views as to whether Canada is disadvantaged by the current challenges with the regulatory and business environment regarding the raising of capital here. Well, who wants to jump in on that?
Well, I think a lot was already said. I mean, to Amar's point, is the challenge in Canada is we not only have over 10 securities regulators that are not all on the same page, and for that reason we have fragmented securities regulation, and the crowdfunding rules is a good example of that. So it's very hard, it's very difficult to navigate sort of Canadian securities landscape, both as a company looking for capital as well as for investors. So while the purpose is to obviously from the regulators to protect investors and to sort of create clarity, it does create confusion and misunderstanding, and sometimes also frustration, because it's difficult from why rules in Ontario work in a certain way, and then if you go to Alberta or to BC, it's different, and it's hard to explain. We as platforms, and I think for the others here that are intermediaries, it's very challenging in terms of educating, both explaining that to companies and investors. The whole discussion about are you an accredited investor or not? On our platform, we don't even mention that word accredited investor. All we ask is, okay, what is your income? What are your assets? And our platform basically determines whether you're accredited or you're not accredited. And then the system knows what rules to apply and what documentation to pull. So, to your point, I think it's definitely a challenge here in Canada that it's fragmented, and even south of the border, with regards to crowdfunding rules, there are federal crowdfunding rules in place, and it's hard. Canada's hard to afford, really, given the size of the economy, to have this sort of fragmented rules. Same with the ICO. I think there Canada is pretty much following what is happening in other geographies, where all regulators in the US and other geographies are moving carefully. For us, from our perspective, is basically the ICO is essentially a new asset class for us. So rather than being equity or debt or partnership units, it's an ICO, which certainly, if it qualifies as security rather than as a utility, it's subject to securities laws and can be and we as a platform process it. Comes down to if and when you can actually trade it, and that's what I think that's the $10 million question is, when can we actually trade those ICOs?
Yeah, so I probably take a different viewpoint from most people in the blockchain space by saying that the regulators in Canada are very forward-thinking and have been smart to not over-regulate this space, given that it is a new asset class, essentially. It's good to watch the momentum and essentially the properties of that. Whether or not it's classified as a security or utility will be up to the regulators. We are taking the mindset, probably very conservatively, that what we are offering is clearly a security. And so we want to comply with all those proper rules and regulations.
Yeah, I mean, I don't think they could put a regulatory framework in place until they understand it. So I agree with him. I think they're taking the right approach. Time will tell.
Yeah, I would say is that I think our regulators are more or less in sync with what's going on in other jurisdictions. Certainly, UK is a few steps ahead of us. US is a little bit ahead of us. But I would rather have us one step ahead, maybe not two steps ahead of other jurisdictions, just because from a global standpoint, Canada is a small economy. We are a very small economy. So not only want to offer something that's more flexible than other jurisdictions, but also an opportunity for other companies in those markets to come here because of a favorable regime. So that's what I would say is one step ahead is better than one step behind.
Okay, great. So I thought we'd have time for one or two questions, or no?
I think we got to cut it off. I'm sorry about that, guys.
Okay, well, I'd like to thank everyone on the panel today, and look forward to the next session.
Thank you so much.
Thank you, guys.